Hello everyone, this is Evan here from the Trade Risk on Friday, August 12th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with just a few individual names. It's going to be a pretty short video, just like you shouldn't overtrade this kind of dull, quiet market. I really don't think we need to overanalyze this market either. And I put out a midweek video on Wednesday. I did a live Q&A session where I went over a lot of these charts yesterday. They're both on the YouTube channel or at thetraderisk.com. You can go back and look over that. I spent 45 minutes yesterday kind of going through, answering a lot of charts and analyzing a lot of charts. So there's a lot of names in there that you might find of interest. If you're not subscribed to the channel, YouTube channel, do so, bottom right hand corner. The point is though, is really not a whole lot is changing here in markets, and you don't need me to kind of tell you the same information day after day. So let's just run through it quick. There are a few interesting things that are happening, of course. Under the hood, there's individual names making moves, but as far as the indices go, the things that the majority care about, the broad markets, not much has been changing. So let's get into the charts here. We closed down 9 basis points on Friday, and if we go to the weekly chart, you can see we closed up 13 basis points on the week. So really not much changed. A very, very dull, kind of quiet, boring market this week. You can see we opened here on Monday and we effectively traded in a point and a half range the entire week. We're still just a stone's throw away from all-time highs. We're still in a very low volatility grinding higher type of environment, and the bulls still have the ball on the intermediate to longer term time frames. The short term, they still have it too. There's just no real momentum there. You have to go to those individual names, either earnings plays or sectors that are seeing some rotation. That's where the action is. So the S&P 500, for me, the only real near-term level that I'm looking at, as I've been telling our members here, is 217 and a quarter. Basically the lows from Wednesday, and also the top end of this kind of 16-day consolidation that we recently broke out from. That's the area that I'd want to see this market hold above to continue to kind of give the benefit of the doubt and the upside surprise to the bulls. If we fell back into this range, that would get me more concerned, or at least neutral, or looking to kind of maybe play both sides of the market, depending on how that all develops. But that's effectively what I'm looking at. Clearly there's no overhead resistance above us. I mean, there is. It's 30 cents away at 218.94, which is the highs from the week. So that's sort of the range that I'm looking at. If we move into the other indices here, the IWM, you can see we got a series of kind of lower highs getting put in here all week. You get a nice trend line to trade against. If you get a breakout here above this trend line, start taking out some of these prior day highs, then again, we're back in motion. The benefit still to the bulls on this in this index as well. 120.50 or so is basically the line in the sand that I'm using. And the Qs have just been in the biggest kind of grind higher of everything. Just a lot of overlap, one step forward, one step back, but it's inching out gains day after day. So constructive all around, benefit to the bulls, but there's no momentum. Got to do less in this type of environment. Don't look at your screens as much. Use wider stops, position size smaller, whatever you need to do to just kind of stay in the game. Try and participate in this type of environment, but don't try and analyze and overanalyze every single move. If we go to the TLT now, get into some of these other markets here. TLT is moving higher, starting to break above, or trying to break above this series of lower highs. We haven't done it yet, but you can see it tried to get above the trend line, failed, close on the lows. So a little bit from both camps there. Can the bears maybe use this type of reversal here to get some downside progress early next week? It still closed up 84 basis points on Friday, so certainly TLT is not an easy short. I in fact still think the long side is attractive here. I was interested in this setup, but the week closed today. It's just not something that I would consider a high probability setup, but I would still give the benefit to the bulls here. If we look at gold, dead center of some recent consolidation, right? We got this trend line down here at 125.50. We got resistance overhead around 130.50, and we're at 127.50. We're dead in the center of this range. It needs time. I don't see much of an edge here whatsoever, so give gold some time. Silver, very similar situation. You got your range here, 1840 to about 19 and a quarter, 1940. It's in the middle of that range. Give it some time. Let it set back up. I don't see much there. USO, we talked about this in the live stream yesterday. yesterday that we did. I think yesterday was a day to take notice. That's Thursday, this day right here. This is a day that I would consider sort of a low probability day to take notice, in the sense that it was kind of the low probability event that happened here on Thursday, where we got a complete reversal of Wednesday's action. And the reason I say it's a low probability sort of unexpected event is because, USO has been in a strong downtrend now for multiple months. It got a nice bounce here, oversold bounce into some of these fast moving averages, and that's typically where you see us kind of fail and roll back over and potentially retest the lows. And this move here on Wednesday, this 3% down move, was really a move in my mind that would set up a retest of this level, but that didn't happen. We actually did the exact opposite, and we continued to squeeze higher here on Friday, further kind of reinforcing that there was something to this day to take notice on Thursday. So I think it's interesting. Again, it's the bulls still have their work cut out for them to try and get this higher, but it's certainly something to take notice. This low here, maybe a higher low here at 970 now, kind of get something going, but it's interesting. I don't have a position in it. UNG, this one was acting well for a couple of months until it broke down through this kind of intermediate support level down around 790. We broke through that mid this week, Tuesday, Wednesday, Thursday. We got a bounce back here on Friday. That's moderately constructive, but really we need to get back above 790, get back above some of these fast moving averages, get back into this range, and then maybe we have some type of larger structural higher low to work ourselves out of this and to put in place here, maybe something like that. But it's still very early to say. We need to give it more time. I wouldn't want to be long this. In fact, I think the sellers certainly have the upper hand right now. But again, we need to wait and see how this happens. Nice pop today on Friday. If we start looking at some of the sector analysis this week, semiconductors, right? No change here. They've continued to lead us for about a couple of months now, and really nothing has changed. Technology, XLK, again, similar leadership here that we've been seeing. The new one that kind of perked up on my radar today, especially the way we closed here towards the end of the week, was the discretionary sector, XLY. Take a look here. You can see it's trying now to emerge out of this recent range that it's been in, and I think this is pretty interesting. You'd want to take a look at some of the sectors, some of the stocks in this sector here under the hood to see what's really leading us, taking out the 2015 highs. Very constructive action looking, and if we can get some follow through above 82, I think that's interesting. XLE also pretty interesting here towards the end of the week, just as it recovers, as oil gets the bounce, so does a lot of the names in the energy sector, and it's coming back to the top end of this consolidation. Still very clearly range bound here, but getting to the top end of where resistance has been. Probably something you should watch. XLB on the downside, this is the one note I'll make on as far as Friday's session goes, down 1.06%. You can see getting a little bit of a thrust off of those highs. So now you have clear resistance here at $49 kind of in effect once again. And that's sort of the level where if you're looking to play some of these names, get momentum back in this area, you'd have to see us take out $49. It looks like we're headed lower for at least a short term, or maybe this is just some type of shakeout. Again, this is something you just want to keep an eye on heading into next week. So that's sort of the sector wrap up. Let's look at a few names here. We'll keep it brief. Alibaba, this is one. Earnings were out, 7% surge to the upside, and it's a whole new chart now. You get a whole new kind of look at Alibaba. It's back in play to the long side. Ever since breaking above this trend line here, this large structural trend line that was basically controlling price for most of its, since it's come IPO, it's been kind of trading lower highs, and that was until earlier in July where we started to break above it, and then we really saw some acceleration recently as it went into earnings. So clearly a 7% move to the upside. Now you got to zoom all the way back out and start taking a look at some of these immediate kind of prior IPO prices, and the real next big level or previous supply doesn't come in till about 104, 105 right in here. So there's certainly some room to float. I mean, I can't recommend to go buy it today at the close. It's overextended, but momentum in this market staying pretty concentrated. This could easily continue to squeeze and make some nice moves. So keep an eye on that. Certainly back in play here, and again, momentum momentum seems to be concentrated. It reminds me of Twilio, which is a trade that we're actually not in this anymore, but momentum staying very concentrated in some of these names. But we got involved in this. Alerts went out on Wednesday right here buying this. This was actually an all-time closing high right here on Wednesday. That was sort of our confirmation signal to get involved here. We had no idea this was going to rip 16-18% in 2 days. Glad and thankful that it did. We scaled profits basically a third at each of these points, but we're out of the trade now. But you can see how fast and how concentrated sort of momentum is in some of these individual names underneath the market hood. So while the SPY, the Qs, the IWM are as dull as can be, there are still things that are moving and that you can kind of generate some alpha and jump aboard on. So that was a trade that we were in earlier this week or throughout this week. What else? Twitter, also one that just had a tremendous amount of momentum this week, right? Filled the earnings gap. It's above $19. The way I look at Twitter now is the longer it can stay above $19, the more the better it looks, right? The bigger, the stronger the bull case becomes for Twitter. I missed the move in Twitter here on this gap fill. I'm fine with missing it. Now, I even if it runs to $20, $21, $22, I'd be looking to play for pullbacks, look to get on board this trend. I like that Twitter is now potentially in play. Want to see it stay above $19. Another one that's interesting is Netflix. As it got a little bit of strength here towards the end of the week. You can see it's bumping up against this trend line that extends from the 2015 highs. Keep an eye on this weekly chart. I think this tells the picture of this nice tightening pattern here. Pretty actionable spot, flat moving averages, but maybe some momentum and direction is actually going to ensue here in Netflix in the coming days and weeks. And then finally, let's look at Tesla. Tesla getting really tight here as well. This is a very volatile, news kind of worthy driven stock recently, and you can see how tight it's getting here in between this 220 and 230 area, more or less. I'd want to keep an eye on this, maybe get some type of expansion. It's in a larger range structurally on the weekly time frame, so you can see we're dead in the center of it. But if you look at that smaller daily kind of coiling pattern, this maybe is the move that gets us towards the high end of the range or to the low end of the range. So that's something to watch heading into next week. And that's it. We'll try and keep it a little short, even though I ranted a little bit longer than I wanted to. Thanks everyone for watching. If you're not subscribed, click that subscribe button in the bottom right hand corner. Stay up to date with all our videos. Have a great weekend. I'll talk to you guys next time.